Hello and welcome to the Stock Radio. Today we're going to enjoy a slightly new format. We've invited two friends of the show today to have a roundtable discussion with us about the effects of the mining industry after the election of President-elect Donald Trump. We're going to welcome back to the show David Morgan, editor of the Morgan Report. David is well known for his opinions on precious metals, really an aficionado, armed with his finance degree, economics, and also in engineering. We also have with us on the show, friend of the show, David Belling, CEO of Bullfrog Gold Corp. Mr. Belling has been in the industry for 52 years, based in precious metals and energy mining sector. Gentlemen, thank you very much for spending the time with us today.
Well, thank you for having me.
Thanks, Carl.
Now, to get our conversation going, David, I'd like to just start off by maybe just getting your thoughts on the election and Donald Trump. Now, he's managed to gain this election with his promises of cuts in taxes and also cuts in government bureaucracy, but also increasing spending in infrastructure. Do you really think this could bring the recovery to the U.S. economy? You know, we've talked many times in the past about how the economy recovery is really never really happened, that we're still in a recession. Do you think these agendas that he has are going to make any improvement to that U.S. economy?
Yes and no. I think short term, yes. I think that what he will implement and getting a stimulus package going through less taxes and then the infrastructure build out, which will create jobs. I think there'll be this big honeymoon period. I think a lot of people will be put back to work, and a lot of things that need to be done, like improving the roads, fixing bridges, repairing dams, other items that will come, I think will be very positive. I think there'll be this kind of overall, I would call it euphoria, but a feeling of well-being that this country probably hasn't had for quite some time. And there'll probably be the thought of, make America great again as a reality. But in my very studied view, that's going to be more of a short-term basis. You cannot spend yourself rich. So basically, we're still digging ourselves a deeper hole because the debt situation will continue to increase because of these programs. Well-meaning, yes. Now, there's a feedback loop, and there's a possibility that Trump is smart enough to implement what's required to, let's say, correct and continue these programs as required. But I don't know. That remains to be determined. My basic view is, from a big, broad economic perspective, that short-term, very good, lots of good feelings, lots of applause, but that honeymoon phase will wear off at some point, and then reality will step in that the debt's only getting worse, and how are we going to pay it back? The bond market's already signaling us that something that's not right, because the bonds have been selling off of late and sharply, which means the December raise by the Federal Reserve Board is almost guaranteed. And this proves, without a shadow of a doubt, at least to me, that they actually follow the market, they don't lead it, because the bond market's already priced in an interest rate increase.
Thanks, David. Now, Dave, as CEO of Bullfrog Gold and your many years' experience in the industry, what are your thoughts? Do you think that we'll see an economic recovery because of President-elect Trump's plan?
Well, I'm confident that we will. It's not going to be a quick fix. We've had both political parties kicking the can down the road for over a couple of decades. In fact, this type of thing on cutting taxes and infusing the economy, Reagan did it successfully, and I think Trump will be able to do that. He's managed a large company, and he's capable. As compared to a politician, I think a politician will sign legislation or sign an executive order, and then the next thing you know, it's left alone and it runs its own course. I believe Trump will manage this thing, and as he sees the economy going and getting the early signals as these are implemented, I think he'll manage the thing properly. So he's a doer and a workhorse. I can see this coming along, but it's not going to be fast. I mean, it took a lot of time to get $19 billion or $1 trillion of debt, and we're not going to fix this thing in the short term. But I think the direction that Trump is capable of going on and having the support of the House and Senate and so forth, I think he will make a difference, and I'm confident that that will happen.
Thanks, Dave. Appreciate your thoughts there. Now, David, Trump has promised to spend $1 trillion in infrastructure stimulation over the next 10 years. Now, that's got to mean a lot for the metals industry. That infrastructure is going to require a lot of metals, including silver, which we know you have a long history of. Do you think that's going to be a great situation for investors to be more keenly aware of metals and precious metals?
I do. I think that anyone that's in the precious metals camp will be talking about this on programs like yours and writing about it. And I think more people wake up that maybe things are getting better, but economically, there's a real important reason to hold precious metals. And I believe more and more people will be coming into the sector. I think it'll be gradual through 2017, but I really think a year or two after that, you're going to see a large move in the precious metals.
Now, again, Dave, your experience in the mining industry with Bullfrog Gold, do you see this as a good time for people to take a closer look at the industry as a whole?
Well, yes. I mean, $1 trillion of stimulation over 10 years is $100 billion a year on that annual basis. I mean, that's not that much. But when you look at what is occurring right now as we speak, the LME metal inventories are at 5-year lows. Iron ore prices are rising rapidly in anticipation of this stimulus working. And I see this especially in the base metals. Now, gold is at a 9-month low, and I believe you will see people migrating back to gold because it's been a store of money. It's been money for millenniums. And so I can see this stimulus affecting the metal business. And again, it's being reflected in the markets right now.
Right, David, you mentioned the bond sell-off in your opening comments. Now, when we look at the sell-off and we look at Trump's promises to bring stimulation, really we know he's going to have to issue more bonds to do that. And when we look at the worldwide economy as a whole, we don't really see any place that those bonds could be sold other than going to the U.S. Treasury to buy those as they have done in the past and continue to inflate their already inflated balance sheet. Do you agree with that? And if so, where do you think that people can find some protection?
Well, you answer your own question. I mean, I do agree. I think that the buyer of last resort is the Federal Reserve. They can monetize the debt markets, and they have been. In fact, they've been the buyer of last resort. I mean, if you look at the international trade balance via the debt markets, you'll see that China doesn't have the appetite for U.S. debt that it used to. Japan, Russia, just about anyone you want to name. So that means that the Fed has to come in when people sell the bonds and give them cash. And this is very interesting because as the bond market has started to drop rather rapidly, you see the U.S. dollar's at a 13-year high, which is a bit of a dichotomy. What it really means is that I'd rather have a dollar today than one in the future because the one today is going to be more valuable than one further out. I think this is starting to get not only to the what's usually referred to as the smartest guys on the street, which means the bond vigilantes or the bond traders. It also is seeping into the consciousness of a lot more people that are investing worldwide. So that I think this will put upward pressure on the precious metals because it's really the only place that you can go that's outside of the financial system. It's the only place you can go if you own it and hold it. I'm talking about physical coins or bars. You're in a situation that doesn't have a counterparty risk. You don't have a broker to interface with. You don't have a bank teller to interface with. You actually hold wealth that's been wealth for thousands of years. So I think that wake-up call, if you will come to the fore. More and more and more people will come to it. Doesn't mean that you put, your life savings in gold and silver. I've never advocated that. I usually recommend 10 or 20%. But those numbers can be proven to actually augment a portfolio strategy to maximize the portfolio returns if you own precious metals, believe it or not.
Thanks, David. Now, Dave, you've made a big investment in precious metals. You're fully involved with Bullfrog Gold, which is a gold property. Was that your thinking behind making such a large investment in a gold property? Or are you looking at gold as the future or as a protection with inflation? Or are you a little more positive about the future?
Well, my 52 years of experience has been in copper, uranium, cobalt, nickel, as well as precious metals. And when this opportunity with Bullfrog Gold came up, I mean, I had just been working on a cobalt project, and the price of cobalt had gone in the tank, and gold has always been a store of wealth. It is money, and I believe the future of gold is very strong. But when I view bond markets, debt and equity markets compared to metal markets, I mean, metal markets are a small fraction of the bond market and a minuscule fraction of the equity market. So any change from bonds or equities and having a small piece of that going into the metal markets, both base metals, precious metals, and so forth, I believe you can see a tremendous rise in the appreciation of the metal business. Gold is at a floor right now, in my opinion. There's also some developments occurring in India at the moment that's just developed here in the past week or so, where the Indians are paying $100 an ounce premium for gold, and the Indian government is actually retrieving large denomination bills and giving you more fiat paper. And I believe that could spill into other countries and have a further drive toward the gold price. So when you look at the other equity and debt markets, I think the metal markets have an opportunity here to grow with the Trump administration.
David, do you have any last thoughts on Dave's thoughts there?
No, I think we're pretty much on board with, why precious metals are important and where they can go. I mean, if you look at all of the assets outside of real estate, gold is less than 1% of the total, and silver is about 0.02% of the total. So as Dave said, any increase in demand could be a very small increase relative to all the other markets and still produce a huge increase in the price of these metals. And I just looked at the update on the screen here for gold, and it's hard to believe that it's off another $23. But these are buying opportunities. We're taught to buy low, and as he said, and I'll reiterate, you're buying gold and silver right now in U.S. terms at basically the cost of production for most of the most efficient mines out there. So whenever you can buy any commodity, especially one that you can store indefinitely, doesn't go bad, doesn't have any issues, and you can have some patience, you're going to make out in the longer term.
Gentlemen, I appreciate both your time today discussing these changes to the U.S. presidency and the effect it may have on the market. David, anything coming up that our listeners can look forward to? Anything that you're writing on the Morgan Report?
Yes, and thanks for asking. I just made I'll call it an emergency run up to Vancouver, British Columbia, which, as most people may know, is the junior mining capital of the world. And I witnessed firsthand a situation with a solvent that is very benign, which means it's not like cyanide, and it can do as good a job, if actually better in most cases, of precipitating out precious metals. So it's in the experimental phase and will be coming to the fore, I think, fairly shortly. In other words, next year, 2017. So I plan to write on this. The company is being formed as we speak, and I love to be first on something if it works out. I hate it if I get behind something that doesn't work out. But in these speculative situations, as long as people understand what the word speculative means and invest accordingly or speculate, you can do very, very well. It's not my emphasis, but it's something that, of course, I have to do as part of my job. And this is one I'm pretty excited about. So thank you for asking.
So anybody would like to learn more about that, of course, you can go to the morganreport.com, which is David's main channel for his thoughts and writing. So again, that's themorganreport.com. And Dave, I know you're busy with the Bullfrog Mine, but if anybody would like to know more about you or your company, what would be the best place for them to get information?
Well, they need to go to our website, bullfroggold.com. That's been updated, and it has our current PowerPoint and some other project descriptions, as well as sourcing our SEC filings and so forth. And they can also get my phone number there and call if they have any questions on the company.
And the website there was www.bullfroggold.com?
Yes.
All right, gentlemen, appreciate your time and for coming on the show, and look forward to this again in the future.
All right, enjoyed it.
Thank you very much.